One of the scariest things that you can decide to do for your life, at least it feels scary initially, is to start investing. And I understand it. Like it's your precious money that you worked hard for and you really don't want to lose it. So my goal here is to give you some game to help you understand a few things on why it's actually scarier to not start investing. Because even in the perfect economy, inflation, which is basically the cost of things, it's going to go up 3% every year in the healthiest of economies. So, what that means is if you got $100 sitting in the bank, next year, that $100 is going to lose 3% of its spending power, which means next year that $100 is going to spend like 97 bucks, right? Then the year after that, it's another 3%. So your $97 times losing 3%, it's going to be more like, 94, $95. So 2 years later, your $100 now has like 94, $95 worth of buying power. So a lot of you don't understand why it feels like every year you can't get ahead, like life gets harder. It's because your money's staying the same. It's just sitting there in the bank, not doing anything for you. But the cost of things keeps rising. So your purchasing power continues and continues to decrease. So you're probably wondering, what can I do about that? Well, you got to find some type of vehicle that you can put your money in to at least beat the rate of inflation. So if you've got $100 this year and you put it in some kind of vehicle like the stock market, maybe some crypto, real estate, whatever it is, and say it gets you a 3% return at the end of the year, you've now matched the rate of inflation, which means your lifestyle is going to stay the exact same this year versus next year. At least it didn't lose 3%. So if you make 3% on your money, your lifestyle stays the same, which means you've got to turn every $100 you make into $103 every year in order to maintain your lifestyle. Now, if you make more than $3 every year on every $100 you make, now your lifestyle is improving a bit because now you're beating the rate of inflation. So there's a lot of ways to increase your money. You can become a content creator. Maybe you get enough views to make some money. Or you can start putting your money into a stock that you believe in, maybe something like Meta, maybe something like Tesla. Or you can diversify. If you've got enough money, you can diversify and buy multiple stocks. But one thing that I notice that people tend to make a mistake on when they start investing is they spread their money too thin. If you've only got $1,000 to invest, you don't need 10 stocks. Because say one of those stocks goes up, say you've got $100 in 10 different stocks. If one of those stocks goes up 20% in a year, your $100 is only makes $20 on it. So your $100 is now 120 bucks. You made $20. But if you had that whole thousand in one stock, your $1,000 is now 1,200 bucks. You made $200 instead of $20. So it's a bigger impact if you've got your money compressed into lesser companies, like maybe one company for every $1,000 or one company for every 10,000. That way, when you do see a nice increase, you actually make some real money. Now, some people want to trade stocks, and trading might not be for everybody. And I understand that. You may work a job to where you don't really have the time to sit there and watch stock movements all day. So you would rather just buy a company at a good price and really not think about it. Maybe come back every couple months and see how it's doing. But even in that case, some of you that have, like, let's say you have a 401k plan. If you work a job, I would highly recommend that you start investing in a 401k, especially if you've got a good company match, because that company is actually giving you free money. Now, it may take a few years to vest, A lot of companies, might take 5 years to vest, which means if you try to pull it out before the 5 years, all that money isn't yours. But even if you go that route or you buy your own stocks, let me explain to you why trading can be a benefit for you. Because a lot of people don't understand that when you trade stocks, when you trade options, you can make money whether the market is going up or even if the market is going down, you can make money. So if you're betting on if you're buying options on a stock and you're betting on it to move up in price, that's what you call a call, right? And if you're betting on a stock to go down in price, that's what's called a put. So obviously, long-term investing, you can't make money when a market is going down. Like if you've owned stock, you're only making money if it goes up. But what's interesting and what a lot of people don't know is, say you've got your money in a stock and you need it to go up, you can also take a small amount of money and buy a put on the same stock. So when it's not performing well, you're still making money. Let me give you an example. If I've got $1,000, let's say in Tesla, I need Tesla to go up in price for that to make me some money. So if I've got $1,000 invested in Tesla, which right now is a little bit over 2 shares, I can also take, let's say, maybe $50 to $100 and buy a put. So if my stock portfolio isn't performing well and Tesla happens to be going down in price, my put is making money, right? So maybe my $100 turns into $300. Now I can take that $300 and I can buy more Tesla at a cheaper price. And once it starts going back up, I've made more money. And I can keep buying puts against my shares that I own. That's smart. And a lot of people don't understand they can do that. So if you got a 401k and you know that the only way your 401k is going to increase in value is if prices are going up, you can take a small amount of money and bet against your portfolio on the downside and make plenty of money in return by buying puts. And I know that a lot of people are scared to learn how to trade. You don't have to be scared. A lot of people they put too much into learning charts and things like that. If I'm going to teach you how to trade, you don't have to learn charts. Like, forget all of that. Most of the people that are talking about charts and double bottoms and inverse head and shoulders and all that, they're not good traders. And it's a bunch of crap, to be honest. Okay. Because a chart can look good, a chart can look great, a chart can look perfect. Doesn't mean the stock's going to do anything. The number one thing that moves markets is news. I know how to analyze news. So if a chart looks great and the news is bad, that chart is worthless. If a chart looks like Meta is going to go up 20% in value, but if Mark Zuckerberg comes out and says, hey, we're reducing our spend, our CapEx, we're reducing our spend on artificial intelligence, the stock's going to go down because the market is wondering, why are they cutting back on expenses? Although your chart looked perfect. So you don't have to trade off of charts. Like, don't be scared to be like, oh, I got to learn how to chart and everything. I don't have time for that. You don't have to learn how to chart. News is what always will move markets. So if you learn how to analyze news, you can get an idea of where prices are going to head. Another thing that's bigger than learning how to chart is learning how to read premiums, learning how to read contract prices. You can learn where a price wants to go just by noticing the change in contracts. But we can get deeper into that some other time. But the message that I want you to take away from this is that you have to do something. Being tight with your money, keeping your money in a bank is only going to make you fall further and further behind. Even the bank is taking your money and putting it in the market and making a return on it and giving you zero. So that's not the way to go. You cannot save your way into wealth. You just can't. I mean, if you got an athlete salary and you're making $400,000 a week or something like that, yeah, you can stack $400,000 a week and be a very wealthy person. But to the average person, we can't do that. So we have to be able to put our money into something where we can send it out and it bring us back more money. That's just how it works if you want to be wealthy. So I encourage you to find where you can cut back in your life and where you can free up some money to take some chances, because chances make champions. But if you're scared to take a chance, your lifestyle, quite honestly, it's never going to change. You have to be able to make sacrifices. If you've got an extra $200 every single week, instead of buying some new Jordans with that, or maybe if you've got a drug habit, I don't know, or maybe going out to eat, you go out to eat with that $200 every week. Why don't you take 2 weeks a month instead of going out to eat or buying shoes and putting that money in the market and just see what happens? Get a good mentor. You don't have to read books. You're not going to really learn too much about trading in markets from a book. Okay. You've got to get in the fire and get burned a little bit. That's the only ways you're going to learn. And if you really want to get into trading, you can start with what's called paper trading. Most platforms have a paper trading option, which allows you to invest with fake money and see if you can turn it into real money. Now, I don't recommend spending a lot of time doing that because, quite honestly, when you're trading with fake money, there's no emotion tied to it. So it's easy to be successful. But when it's your real money, there's a lot of emotion going on and you can make a lot of frantic decisions. So it is a lot different. But again, you've got to do something, because just working and putting your money in the bank is not going to give you the lifestyle that you deserve. You deserve to live a remarkable life. And life has made it very easy to do so. You just got to want it. You got to go out and get it. And I promise you, it's not going to take as much effort as you think it will. So I hope you take action.